Let's also welcome on the show Sangeeta Purushottam, Managing Director at Nine Rivers Capital as well. Sangeeta, hi, morning. What is your sense? Will the Fed action post or rather boost Indian equities, or do you think it's going to be again a lackluster day?
Well, I think, in the near term, we could see the rally that we're currently seeing continue. The market seems to be discounting a lot of bad news, and there is a temporary move upwards. So I think if you just look back, say, at the last 2 to 2.5 years, we have seen intermittent rallies within a trend which has been essentially moving down. And that's frankly the way I look at it. You need a lot of confidence in everything going right, really, to see this market going above, say, levels of 55, 56, where you can feel that this is going to sustain. That looks a little hard given whatever is happening both within the country and outside. So I think for the moment we are in for a rally, but is this a trend change? Very doubtful.
Tata Motors on Wednesday was the top or the biggest gainer on the Sensex and on the Nifty. Tata Motors on your screen, 245 rupees, up 7 rupees. Sangeeta, strategically, how would you time your entry and exit from Tata Motors?
Well, I think, the valuations of Tata Motors at this moment are are reasonably attractive, I would say. It's made a low and it's basically bounced back from there on the back of, the recent numbers. There could be some more upside, but, given that we've already seen a move of about 10 to 15% from the lows, I think I'd just wait for a while. We're sort of in the middle of the current rally that we're seeing. I'd wait for a more opportune time, because I think the chances are it could, if the markets were to fall, go back to the earlier levels that it made or even below that.
Sangeeta, what is your view on the entire cement pack? I mean, the CCI probe outcome aside, do you believe in the fundamentals of the sector?
Actually, I think that there is value in the smaller cement companies. When I look at the larger cement companies, and you look at them from a more longer term metric like EV per ton, I don't find huge amount of value. My whole issue with the cement bank is that buying into a cement stock rests on the premise that the pricing power that the companies have seen of late will continue for the next 2 to 3 years, because that's the time frame over which we're seeing excess capacity in the system. And it's something which I frankly don't have any basis for taking that call that, this kind of pricing discipline or whatever you choose to call it for the sector is going to stay. So I'm not very comfortable. If I were to buy, I'd rather buy some of the smaller companies where at least you have a valuation comfort.
Okay, I just want to revisit consumption stocks, and at least the high flyers, they have corrected, and they've corrected quite substantially from the recent highs. Asian Paints, it's down by about 10% from its all-time high. Ditto for Bata, which is down actually about 100 rupees plus from the recent high. Jubilant Foodworks is down about 100 rupees from the recent high. VIP, similar stock pattern, and a similar price pattern is also visible for Colgate Palmolive. Sangeeta, what do you make of the recent price action and volume action in some of the consumer names?
See what happens if we saw a somewhat similar trend in, post-December as well. The fact is that this market is very, very sharply divided on valuation. So anything which had visibility of earnings is now trading at high multiples, and there's a fair amount of value emerging in the other sectors. So for example, if you look at some of the sectors like, let's say take PSU banking, for example, on valuation basis, many of the banks are actually trading at almost close to a 5-year lows or getting there. Same as has been the case in, say, the capital goods sector or, infrastructure. So you have a whole set of beaten down sectors, and then you have the sectors which have performed. Now, anytime you have a rally happening from lows or any kind of hopes that something positive may emerge, you'll see the reversal happening, that, the so-called safe sectors will not perform for a while and money will flow back into the beaten down sectors in the hope that, you know, there can be a sustained move. So I think that's really the phase we're going through.
Sangeeta, at the current market environment, where do you think there is risk, there is opportunity, and there is safety?
I think there's some opportunity in the beaten down sectors, because if we do see a rally, then they're the ones who are going to perform. There is a risk wherever I think in the same manner there is risk in the very same sectors at valuations if they get higher and in case the performance doesn't come through. So I think I'd say that there's a moderate opportunity here for them to move up. Safety, I think, still remains in, you know, some of the blue chip consumer names. So I'd say names like ITC, HLL, those kind of names. There's reasonable safety. They may not move up too much, but the risk of their falling is also very low.
Sangeeta, are airline stocks worth a punt? If I look at the current existing setup of the airline industry, three players who are gaining market share. Crude prices are down, no capacity addition is coming up, which means the existing three players will enjoy more pricing power?
Well, the argument you make sounds logical, but I must confess I don't track the sector very closely.
Sangeeta, market insiders are also of the view that it's time to revisit asset owners, names like GMR, GVK, Lanco. These are good businesses. The problem is cash flow. And companies like GMR and Lanco, they are committed to clean up their balance sheet, and they could be, you know, good high risk, high return ideas.
I think there is value in anything which has been ignored, because when you start looking at, you know, you don't look at the market just from a visibility perspective, and you look at it from a valuation perspective. There are a lot of these sectors which have been ignored where there are pockets of value. I think the key issue really is over what time will this value unfold. We could see some of it unfolding in these rallies that we have, and a large part may happen over the long run. So you need to be prepared that if it doesn't work, you cut your losses and get out or hold on for the longer term. But yes, I think everything other than what's really been performing has pockets of opportunity.
Sangeeta, from a 6 to 12 month perspective, what is it that you're recommending to your clients to start nibbling in or buying at this juncture?
You know, we don't really recommend any stocks to clients. We're essentially an investment firm ourselves, but basically our focus essentially is some of the smaller companies. So I think if I were to look at what would I buy at over a 6 to 12 month, for me in today's environment, I think value remains very key. It's a time where you know, your growth visibility is not very high, and therefore the buying premise cannot be paying high valuations for future growth. I think we'll see growth remain lackluster for the next 12 to 18 months. The key really is to buy into value in good, well-managed companies. So it's very specific to particular stocks and you know, and companies which could be in beaten down sectors but are fundamentally good, and then stay with them for 6 to 12 months or maybe even longer. So the key premise of investment today has to be value.
Sangeeta, since you are in the investment business, where are you investing?
Well, currently we are actually in the fundraising mode, so it's not as if we're specifically investing, but you know, we're doing exactly what I said. We're looking for very stock-specific opportunities. These could be companies across diverse sectors which have good managements, which we believe are doing something to differentiate themselves even in tough times, and those are the kind of companies that we're meeting and keeping track of. And it doesn't matter whether they don't perform over the next 6 to 12 months, because the horizon we're taking from at today is about 3 years.
Sangeeta, final question, and a hypothetical one. If you get $100 million, where will you invest your first $10 million?
I would actually invest it in in some select companies in the mid-cap space. I think there are companies there which are good long-term plays, some even in the consumption space where the valuations have not gone out of whack. That's one pocket I would look at. Then the other pocket I would look at is select companies who have some clear opportunities on the either the outsourcing or the export side, and there are opportunities there as well. So I think that's the first investment I would make.
Well, I think I really appreciate your time, and glad you could accommodate this interview request.